Click the bell icon to get latest videos from Ekeeda.
Hello friends, let us do now one problem of common size income statement, the question which was asked at university examination. Let us understand what type of questions are asked and how to present the answer. In this question there is one unique point. In this problem there is no gross profit or gross loss. Let us understand how to present this. Let us proceed. Read the question. From the following income statement of Messrs. Shritej Limited, prepare common size revenue statement with amount and percentage in vertical form suitable for analysis. Opening stock of finished goods, cost of goods sold, materials consumed, cost of goods sold, wages, cost of goods sold, factory overheads, cost of goods sold. There is no gross profit. Sale of finished goods, this will be first item, sale. Closing stock of finished goods, this has to be deducted while calculating cost of goods sold. Goods distributed as free samples, this will be also deducted while calculating cost of goods sold. This is a new point. Here goods are distributed as free sample for advertisement purpose. Staff salaries, administration expenses, telephone charges, administration expenses, directors fees, administration expenses, depreciation on office furniture, administration expenses, advertisement expenses, selling expenses, commission, this is non-operating income, free samples, this is advertisement expense, selling expense, publicity expense, selling expense, interest on debentures, this is financial expense, operating profit before interest. From that we are required to deduct this interest to arrive at operating profit after interest. Interest on loan, this is a similar item of interest.
Sir,
this is similar item of interest. Net profit, it is 80,000. This is a balancing figure. This will be carry forward here. Net profit 88,000. Here we have opening balance of profit. This is previous year profit brought forward. Proposed dividend, this is appropriation. Finally, surplus transfer to balance sheet 1,18,000. First, we are required to start with sales. Sale of finished goods. Amount is 10 lakhs. From this, we are required to deduct cost of goods sold. For calculating COGS, we are required to consider these items: opening stock of finished goods, material consumed, wages, factory overheads, closing stock of finished goods, goods distributed as free samples. Sales 10 lakhs. Cost of goods sold is also 10 lakhs. So gross profit is nil. Opening stock, material consumed, wages, factory overheads we have added. It comes to 10 lakh 50,000. From this we have deducted closing stock of goods 45,000, goods distributed as free samples 5,000. So we arrive cost of goods sold 10 lakhs. Gross profit is 0. From this we are required to deduct operating expenses. In operating expenses, first we have office and administration expenses. For office expenses, we are required to consider staff salaries, telephone charges, directors' fees, depreciation on office furniture. Total office and administration expenses 70,000. To this we are going to add selling and distribution expenses. For selling and distribution expenses, we are required to consider advertisement expenses, free samples, publicity expenses, total selling and distribution expenses 97,000. We'll be adding these operating expenses now. Total operating expenses 1,67,000. This will be deducted from gross profit, which is nil. Therefore, we are having operating loss. Operating loss before interest 1,67,000. less interest paid. We are required to consider interest paid, interest on debenture, interest on loan. Total operating loss 1,77,000. To this we'll be adding non-operating income. In non-operating income we have commission received 2,65,000. Finally we got current year's net profit 88,000. To this we are going to add opening balance of profit. Opening balance of profit we have 1 lakh. Total profit available for appropriation 1,88,000. Less appropriation, we have proposed dividend as an item of appropriation 70,000. After deducting proposed dividend 70,000, surplus profit remains 1,18,000, which will be transferred to balance sheet. We have arranged income statement in vertical format. Let us prepare common size income statement. For preparing common size income statement, sales amount we are required to take as base by assuming it as a rupees 100. Sales actual amount is 10 lakhs. For common size income statement, it is taken as 100%, that is 100. Each value in income statement will be now converted into this percentage. The method is very simple. Say for example, we are starting with opening stock 2 lakhs. 2 lakhs divided by 10 lakhs multiplied by 100. So it is 20%. Material consumed 6 lakhs. Again it is 6 lakhs divided by 10 lakhs multiplied by 100. 60%. Next, wages 1,25,000. Factory overheads also 1,25,000 divided by 10 lakhs multiplied by 100. It is 12.5. 10,50,000 divided by 10 lakhs multiplied by 100. 105. Closing stock 4.5. Goods distributed as free samples 0.50. Cost of goods sold is 10 lakhs divided by 10 lakhs multiplied by 100. It is 100%. There is no gross profit. Gross profit is 0. Staff salaries 17,500 divided by 10 lakhs multiplied by 100. 1.75%. Similarly, we can calculate for other items. Telephone charges, director's fees 1%, depreciation on furniture 3.25%. Total office and administration expenses 7%. Similarly, we can calculate percentage of selling and distribution expenses. Advertisement expenses 1.2%, free samples 0.5%, publicity expenses 8%, total selling and distribution expenses 9.7%. We can calculate for total operating expenses, that is 1,67,000. 16.7%. Operating loss before interest 16.7%. 16.7%. Interest on debenture 5,000, interest on loan 5,000. It will be 0.5% each. Operating loss 1,77,000. Operating loss 1,77,000. 17.7%. Commission received 2,65,000. It is 26.5%. Net profit 88,000. 8.8%. Opening balance of profit 1 lakh. It is 10%. Total profit available for appropriation 1,88,000. 18.8%. Proposed dividend 70,000. 7%. Finally, surplus 11.8%. In this question, there was no gross profit. We have prepared vertical income statement as well as common size income statement. Thanks for watching this video. Stay in tune with Ekeeda and subscribe to our channel Ekeeda. Thank you.